to this month's installment of To Catch a Fraudster. I'm Tom, one of the co-founders and executive chairman of CertifID, for those of you that I haven't had the privilege to meet. And really excited about today because we're going to dive into the ever-evolving conversation around static or check payments versus digital payments, and how we think about a future world where digital payments, especially since COVID, are becoming more and more not only popular, but we have visibility on how much more secure they can be if tucked into your process and procedure properly. So if you have questions during this, our team will be monitoring questions in YouTube in real time. So post those and we'll be sure to interact in kind to those inquiries. Very excited to have with me Jason Campbell. Jason is now part of our CertifID team. He really leads everything like thought leadership, payments, payment strategy, integration, go-to-market, and was really early days on the payments.io team, which joined us by way of acquisition at the end of last year. Jason, I'll backfill a little bit, Jason, and I'll hand it over. What I like about Jason is similar to myself, has sat in the title mortgage lending seat and felt pain, felt friction, felt, man, there just has to be a better way to administer, to do something. And I'll just speak from experience. That has a way of developing curiosity, and then when that curiosity turns to product development, you know exactly what you're solving for. So, Jason, I didn't mean to steal thunder here, but one, so blessed to have you on the team, but also thanks for taking a minute to spend with us and share some insights.
Yeah, thank you so much, Tom, and appreciate you guys inviting me to join the session today. I've always enjoyed watching them, and now to participate is great as well too. Yeah, you're spot on. You know, as my career kind of progressed from the mortgage to the escrow space, it became very evident to me that the real estate transaction is a very fragmented process, right? You know, we know there's a lot of parties involved. We could name them all in the transaction. It's quite the long list. But, you know, from the escrow perspective, the escrow company's responsibility is collecting those funds in advance, getting them into the escrow account, and then you know, the day of closing, dispersing those funds to all these different parties in a timely manner, which can be very difficult. And I was fortunate enough to, you know, meet a group of like-minded individuals 5 or 6 years ago who were operators in the space as well. And our goal quickly became to try to find a solution to bring efficiency to that process, you know, eliminate the paper checks that are going back and forth, and obviously reducing fraud as well too. So thanks for having me. I'm excited to be here today.
No, 100%. And through this, Jason, we're just gonna have a conversation. We both sat not only in the seat but in somewhat different seats, and I think that will round out some of the topics. So to jump in, we're going to talk about check fraud. We've been talking about wire fraud for essentially 5 years ad nauseum, and we haven't taken a step back to say, well, let's peer behind the curtain of how big the check fraud issue is, how it unfolds, and just touch on how advanced technology like AI is making it even harder to detect, both at the title company level and at the financial institution level. You know, what we're seeing behind the scenes, like let's dissect that, and we will a little bit. What does that mean for EMD, or initial, you know, funding of a transaction, cash to close, disbursements out? Like, Tom, how, if I'm handing somebody a check, like what's the problem? Because, you know, I've told people that, you know, I'll just give you a check, that way we'll avert wire fraud, and there's just a different type of fraud we'll go through. What the expectations are and where the whole thing is moving. And I'm hoping after you leave with this, whether you agree with it or not, it won't make it that less true that the world is moving and expectations are moving in a fashion very quickly around some form of digital payment. And then I'm really excited, Jason, because you were early days like we were certified. like, what are the blink points, and why the adoption challenge? Because this is a big deal. I mean, I'm running a large title agency here in Michigan alongside of the work I do at Certified, and I'm not suggesting as we go through this that you just wave a wand or have a meeting and everybody buys in, your clients buy in, your customers buy in, and everything flips from check to digital. So quickly, just some numbers to share that we haven't shared in the past. We did some research on, what's the size and scope of check fraud. It dwarfs wire fraud. It's not even close. The size, the scope, the impact, almost a 400% increase in check fraud since the pandemic. This is a stat that is very unique to any other form of payment. 65% of all businesses, this isn't just real estate, this is like all businesses have some attempted or actual fraud. We had last week, our bank alerted us that some folks were mimicking checks of Sun Title, our agency, and trying to deposit them, pretending that they were sellers in a transaction. We had a Craigslist scam going back several years on the East Coast. It was multiple checks trying to be fronted. So I think check fraud is, in a lot of ways, we could say, hey, that's like old school, more antiquated. They're more prolific. They're smaller numbers, but a much more frequent type of attempt. And that's, I'm going to knock the check off and write my own check. I'm going to take the account credentials and create a whole new persona synthetically, or I'm just going to try to cash a check. Like, I'm going to act as the payee and I'll try to cash it. And I can tell you from experience, our wire fraud that ultimately created Certified started with a check fraud. So we took a check in. It was a certified check. We had deposited it into a financial institution, a very large financial institution. We were given assurances by our business banker that it had cleared, and we wired funds off of that check, which ended up being an Earnest money check. And why we were asked to wire it was because it was a kind of a distressed asset sale. This is back in 2015. And lo and behold, the wire went out, the check bounced, and we were out $180,000 in an instant. So, but it's advanced even further than that. So this kind of left side, right side comparison, the check looked absolutely official. So I'll work through our example. Like, it looked really, really official. And we were given assurances that it had cleared. 1 to 3 business days, I don't know. I think it can be longer than that, actually. And I think some of that depends on the size of the institution and the jurisdiction where it's clearing through. So in our case, it was deposited in West Michigan here in Grand Rapids, and it was trying to clear through Idaho or Montana, and much longer than 3 business days. And that is that window that they exploit, because digital payments are immediate. Check has to fully clear the reserve. And I would argue that a cashier's check really doesn't clear any quicker than a starter check if you walked in and got a checkbook these days, as if anybody does. I don't know. And then the cashier's check, I mean, the verification is like very opaque because there isn't a consistent standard in the Federal Reserve or FinCEN or any of the clearinghouses as to like what are the protocols. So when our business banker said, yeah, don't see any alerts or holds on it, man, you're good to go, rock solid. Well, what were they missing? Right? And how would they lead us down that path to such a crazy end? I'd like you to, Jason, anything to add on that before we provide the contrast of like digital?
Yeah, I mean, look, you touched on a lot of it. Check washing, as it's called, has been around for years, right? It's not new. What has changed is the AI and the technology that's available that makes that even easier, right? Checks are significantly more susceptible to that type of activity than they were even 5 to 10 years ago. And I think that that's why we've seen a transition, or at least an interest in the escrow space of how can I implement technology and secure tools to help eliminate this type of situation, right? And you mentioned COVID. I think COVID really kind of accelerated that type of interest in digital payments tools, because during COVID, you were no longer able to really walk into your bank and get that certified check, right? There was no face-to-face interaction. So all these things that have taken place over the last 5 to 6 years have really kind of advanced the need for digital payments within the escrow transaction, for sure.
No, I agree. I heard because we have a really tight relationship with federal law enforcement, and I heard multiple examples of, you have an overnight box outside of your office, and we have multiple of them, and these bad actors would put like a washer with a piece of double-sided tape on a fish line, and they'd insert it down into the box, and then would fish out, a package before it got picked up. And obviously a lot of checks roll through that overnight for mortgage payoffs, for seller nets, for commissions, some of it is even very like kinetic and old school on how they get their hands in the check. And then you have inside people that unfortunately are recognizing that, I could, lose an envelope here and I could resell it to some guy, on the street or something. And it opens up, a whole aperture of bad.
Doesn't take a high level of sophistication to accomplish what you just mentioned there. So you're right.
I think the biggest thing for me as a large agent is when you move into a digital landscape, it's more transparent. It's transparent in its way that it identifies the timing around the initiation and receipt of transfers, and that's something that we'll never have with the check process, because we have to assume that we can't move on that check or fund off of that check until it's fully cleared. But the kind of dirty secret is I'm in a table funded state. It's a little different in escrow states, but if I take even a certified check today on a closing and I'm wiring hour after for the seller, am I really wiring off those funds? Well,
Right.
I'm really not wiring off those
Right.
funds technically, because it's an assumptive, but it hasn't fully cleared. So you can have, and you can create a layer of trust. And I think this is what's interesting is and we'll get it through education and awareness, a branded, trusted system like Venmo, like payments, like Certified, and we'll announce something exciting at the end here, provides a layer of trust that the consumer, especially our first-time buyers, can get comfortable with. In the instant validation and confirmation that, hey, title company, Jones family initiated their payment, we can see it come in, and we circle right back and say, you know what, Jones family, we got your money. Looking forward to the next step in the transaction. Go ahead, Jason.
Exactly, and you're spot on. I think what, maybe people who haven't explored digital payments up to this point, part of maybe the misconception is how they're able to track it and the transparency. Digital payments gives you complete transparency, to your point, from initiation to when those funds arrive in the escrow account, and even beyond that, once they arrive in the escrow account, they're delivered with metadata that's going to help you identify who sent the payment, where the payment came from, how you're going to reconcile it within your day-to-day operation. All those things are delivered with digital payments, to just create efficiency for the title agency as a whole.
Yeah, candidly, when we were in talks to have you join the team, in the whole, payments.io team, while I was excited that Certified would have the ability to support a payment rail, I was candidly much more excited about the communication that you guys had built around the initiation and confirmation of the payment for a couple reasons. One, it would enable us to confirm, and I think that's a really important touch point in a transaction that differentiates a title company from others that don't have that. But with our fraud recovery services, I mean, we could essentially deploy an investigation into where the money went before somebody even, like you're pulling the fire alarm before somebody even smells smoke.
Right.
You know what I mean? And that
Right.
that was always a vision that Tyler and I have had, is how do we do that? Like, how do you get that granular around payments? And you can only do it through that type of transparency in real time.
Right.
Yeah.
Right. No, you're exactly right. I was going to say, also when you're talking about digital payments tools like the Earnest Money tool itself, it's also, like, I view it as the introduction of a new client to the title agency, right? They maybe have not interacted at all up to that point. Maybe the title agency has received a purchase contract, maybe not. But it really kind of introduces that new customer to your entire ecosystem of technology. Hey, we're going to get them comfortable early on with logging into an application and sending payment, and they become comfortable throughout the process that's going to continue down that path.
No, I agree with that. And to maybe pull that thread a little further, and I've said this before, I think the industry, from a title perspective, with affordability being such a headline, and the cost to open up a transactional envelope and close it for buyers and sellers, and commissions and mortgage loan origination fees, and title insurance has this big fee but no claims history like other forms of insurance. Like, we're all kind of under a brighter light right now.
Yeah.
I think the narrative moves from not just protecting home ownership rights or property rights in the United States, it's protecting the homeowner. It's
Right.
protecting the consumer. And this is another tangible way with their life savings, and I think you bring up a good point. This is ours to lose as an industry that says,
Yeah.
hey, we're here. Here's a part of what we do is safely receive your EMD obligation, and we'll let you know when we do.
Exactly.
So paper checks, it's like my wife, early after I passed the bar and started working at the law firm, she got me a T-shirt that said, "Trust me, I'm a lawyer." And
Love that. Love it.
and this is like the same thing. Trust me, I'm a certified check. I got a watermark, I got a seal on it, right? Like, it's the same thing. And I would just caution you, as a certified check victim, you don't know. And the point that Jason made earlier with the sophistication, the checks look so incredibly good that you might want to just have a rail, and we do as well. Like, you might want to just get it earlier in the transaction if you don't have you're not gonna flip a switch after this webinar and say, okay, no more checks, everything digital.
Right.
It's not going to happen. But you have to understand that there are vulnerabilities and risk, and you're going to see them more frequently in checks than you will in other forms. So that's the EMD. So how would it happen on an EMD? And we've seen this, and we have refused to take transactions when we see it coming in. Buyer says, look, I'm going to put in an offer. This is typical. Vacant land, or whatever. I'm going to put in an offer for $150,000. I'm going to send you a check for $175,000, and I'm going to send it to you by way of whatever. Or the EMD is a large EMD, and then all of a sudden you deposit the check, and they're impersonating both listing and buying agents, and then they cancel. I got my home inspection quicker than I thought, and or I talked to the township and I can't build my pole barn, so now I'm triggering a contingency in the purchase agreement. Can you wire me back the funds? And that's where you're going to get pinched. That's where we got pinched, is that they cancel the transaction. They actually request a transfer back by way of electronic payment, typically a wire, and then the check comes back NSF. Rinse, repeat strategy. On closing funds, so this is your cash to close, again, similar setup, much larger amount. We're seeing about 25% of our residential transactions in our title agency are in cash, and then they'll go to the mortgage market to take some sort of HELOC or debt down. They can create cashier's checks at a rate with AI right now that look incredibly convincing, and then again, that gets dispersed or it gets ultimately canceled, but now larger money, not just EMD, is at stake. Right? So just be wary. I mean, if you got a $30,000 vacant lot and 10 grand is coming in for EMD, you need to train your teams to say, you know what, isn't that normally like $500 or 1,000 max? Like, this just seems odd. And make sure that you're independently verifying someone's identity before you wire out. Anything on the inbound you want to add, Jason, on how this fraud works, and then we'll go post closing.
Yeah, I mean, I think you've touched on a lot of the red flags, as we call them. So yeah, definitely some good points there. Again, from a digital payments perspective, a lot of those risks are reduced or eliminated, right? Because you're going to have the data on where those funds come from, be able to properly reconcile them. But also when someone's sending funds to their bank account, there's verifications that are done on that front end, right? Like there's compliance checks that are done on the sender of payment. There are checks that are done on the property in the transaction. All those things kind of take place with digital payments that they weren't if you're going to receive a check for that transaction.
Yeah, that's true. When we think about incoming and fraud avoidance, and it's not just size dependent, but some of it may be, is picking up the phone and calling the institution that it's drawn on and seeing if they'll just, you're not asking for account details, you're asking, did you create this check? Like, is this check yours? And every certified check has a unique check number on it. And then just getting the story as to, where it was drawn from and, why not digital? Why couldn't we send this in by way of a wire? And just get some facts and circumstances around it. Check fraud on the post close, you might think, man, once I hand that check over, like, I'm good to go. Well, with remote capture and mobile deposits, and we've seen situations unfortunately happen, quite a few. Somebody goes out to the car, takes a snapshot of it, does a remote deposit, comes back in and says, you know what, I was just talking to my financial advisor and I really need to deposit this into a different account. Can you take this check back and ultimately wire the funds to another account? And that's where we call it the chain of custody gets broken and you can't trust it. So you have to have a policy that when somebody leaves with one of your checks, there just aren't any circumstances where that can be voided, reissued, because that's a different check number, or voided and then converted to some form of electronic payment for fear of duplicate payment, duplicate deposit, right? Anything to add on the outbound side, Jason?
No, well, look, I think the common theme here is we're talking about checks a lot, right? And the problem associated with checks, whether it be incoming or disbursement. And, like I mentioned earlier, and everyone knows, that, you may have 20 some odd disbursements for a single transaction, and those could be 20 vulnerabilities, right? Mm-hmm. Because those paper checks are going out. So no, you're spot on, and it's why our goal every day when we wake up and go to work is to continue to develop solutions that solve for those paper check issues.
Yeah, even as I think about it, mortgage lenders and some of them on the commercial side that aren't wiring in advance will require the commercial loan officer to show up with the check at closing, not the client. Don't worry about stopping by the bank on the way. We'll take the check from the actual commercial loan officer or residential loan officer. We can't take it from the client, him or herself. So just think in terms of like chain of custody and some of those vulnerabilities. So let's shift gears to what's the case for digital payment. So I'll just make an overarching market case. I recently studied like the generational gap between sellers and buyers. And where it sits in most cases for residential property is that the baby boomers are selling to Gen X and Gen Z, right? Or I'm sorry, millennials and Gen Z. Gen X is being skipped over because we're just stuck doing family stuff, right? We're just like stuck in place. But our parents are essentially, the grandparents are selling to the grandchildren. Very, very different expectations and the generations in which they grew up in. To put it in a frame, 85% of our first-time home buyers prefer/demand an ability to transmit electronically by way of payment. They don't own a checkbook.
Right.
You ask them for a certified check and they're going to say, what is, well, they might not ask you, they'll ask the AI. Hey, Claude, hey, what is a certified check, right? Because they haven't heard of it.
Right.
85% of your first-time home buyers would expect and find odd if they could not transmit by way of electronic payment. Flip that to only 18% of baby boomers are sellers that are using electronic payments in those platforms on a regular basis. It's almost like completely inverted.
Exactly.
You know, so what I like about the security and transparency is just around, you know, how in real time we can message out the authenticity and the receipt of those payments. So Jason, you're much closer to this than I am based on your career path. Walk us through this.
Yeah. So you're exactly right. And millennials and Gen Zers, it's how they interact with one another and businesses on a daily basis, right? Is through digital payments applications overall. So it is demanded. You know, we have title agents that reach out to us and say, hey, we're being asked in our market to implement a type of tool. And specifically, they're like, we're being asked to implement Venmo. Well, we can't use Venmo for real estate, right? For a lot of reasons. We won't go into them all today. But what they're looking for, what they really mean is they're looking for a digital payment experience that is compliant for real estate transactions. And not only compliant, but is providing them all of the necessary information they need to reconcile those transfers properly. I know I continue to say that, but to me, it really is, you know, other than the security around digital payments applications in general, the reconciliation piece is probably the most important for escrow. So yeah, that to your point, I mean, it is the market has shifted over the last 5 to 6 years, and having a digital payments application today, I almost consider it table stakes, quite honestly, in the escrow space. I'm a little bit surprised when I see title company websites and they don't have an earnest money deposit button on them or instructions to download an application to send earnest money, something along those lines. You know, it's definitely in demand for today's market for sure.
I completely agree with you. And I think it's a missed opportunity when title agencies don't have that offering and aren't educating against that offering. So let's walk through, and we kind of went through a lot of these, you know, how do we de-risk check fraud, and then how do we think about a path to broader adoption on the digital payment side? So again, how to mitigate risk using verified payment methods only. I mean, we have the scanners in our offices and this and that, but you might want to think about, again, the themes of like chain of custody, this idea of like how long is the average clearance. Your bank would be able to tell you that. What are the interdependencies there? Is it size? Is it geography of where the payor bank is located? And then moving, you know, to more of a real-time platform like digital payments like we have. You know, starting to remove paper check dependency, both inbound and outbound. you have to have positive pay turned on, guys. I mean, that's on the outbound side. Just it's typically free or a nominal charge that would sit in your treasury module, and that would alert you, whenever you cut a check, you upload that to your bank's positive pay registry. A check gets presented and there has to be a match. It's almost like a dual authentication from a match perspective. And last week there wasn't a match, so we were alerted of somebody trying to impersonate us by way of a check. Confirming instructions, and I think we just need to do a better job as an industry of just setting the client's expectations up for success. Some of you are sitting here saying, Tom, I don't have a choice. I'm in a good fund state. So as much as check fraud is interesting, we have to take in everything by way of wire. I'll pick on Ohio. We're not in a good fund state in Michigan. I wish we were, but Ohio is, and Texas, and many, many others. And I think this is a really key piece of it, is like centralizing the visibility of the incoming payment stream. That's what drives me just absolutely crazy sometimes is, Jason, you're our buyer. I send you instructions for payment, and outside of certified and payments, let's say you're wiring funds, it just shows up.
Yeah.
And it could show up today. Let's say you're closing next Tuesday. It could show up Tuesday morning or any point in between. And you mentioned reconciliation and the ability to really tag that to the ledger of a file. And it takes a whole nother step to say, okay, it's cryptically coming over. It looks like we were looking for this number coming through. You know what I mean? And it just takes more than you'd think it would.
Yeah, and for earnest money specifically, you may receive several incoming transactions a day of a similar amount, right? That show up.
$1,000, 3,000.
Yeah,
I mean,
it's
they're
like,
in
okay,
round
well,
numbers. They're always in round numbers. You bring up a good point. Right?
How do I apply this?
Right.
I'm not certain exactly what that's for. I'm gonna have to burn some calories to figure that out. Human calories to do that. So, again, those are the types of things that we're looking to solve for.
So let's pivot to adoption. Like what are the most significant headwinds, Jason, as you guys went to market early with a digital payment solution with payments? I guess what surprised you about that, and what are some of the things that the title industry can expect to face when moving towards this bridge to a digital payment structure?
Yeah, well, I'll tell you, one of the things that surprised me early on is, when we were thinking digital payments, at least I believe that, we were looking in certain areas with certain demographics, but I was kind of shocked, actually. We saw a great adoption of digital payments in markets that aren't like the most populated suburban markets, right? Because in those particular markets, it was more problematic for home buyers to try to find ways to get those funds to their title agency. They weren't right around the corner, right? Maybe they were 30 miles from the real estate attorney or the title agency, and they needed other ways to deliver those funds. So one of the things that surprised me early on was, it's applicable to all markets in some sense. And I would say from like an adoption and implementation perspective, we see the quickest adoption when title agencies really have that one person who's spearheading the effort. So maybe they kind of say, hey, you be curious, right? You be curious for us, and go out there and research a couple solutions that you're interested in. But having that single person that's like helping to implement and become the champion within the title agency is really important, because, enthusiasm spreads. And once that individual, sees the efficiency that they're gaining from a digital payments application, that kind of like spurs adoption throughout the organization as a whole.
Yeah, that's a good point. That's a good point. You come up with 3 strategies: getting buy-in, educating the team, setting expectations, having your sales team go out and kind of loud and proud say, look, this is the adoption curve of digital payments since COVID. This is, geographically and generationally the expectation, and we've got the ability for you as a referral partner to offer this as a convenient, secure solution. that just elevates, I think, the communication and the safety and security of the transaction. That's how we've kind of positioned it
Yeah,
in our
that's
agency,
great.
and it's a good one. You know.
Yeah, I think that's great.
Yep. All right. Well, I want you to walk us through what is starting after the upcoming holiday here. So.
Okay, well, we are extremely excited to offer the earnest money deposit solution as part of the certified portal, as part of the certified experience and the certified family of products, if you will. So, I've mentioned quite a few times during this conversation about reconciliation and transparency. Our earnest money deposit tool will provide you all of the transparency that you need, and it will be within your certified portal. So I think everyone can agree that people are working in a lot of different systems nowadays, especially in the escrow space. So when you can consolidate your tools into a single system or a couple of systems, I think that's really important, especially from adoption for internal team members. But yes, we are launching our earnest money deposit tool July 14th. It will be available within the certified portal. What you see on the screen here is actually the customer experience. So the home buyer experience, it's extremely mobile friendly. They will have a Venmo-like experience, as they say, but obviously compliant, and the reconciliation and transparency is there for escrow. So I'm super excited about it, and excited to have these conversations with our future customers for sure.
I'm so excited that it's going to be a fully embedded experience.
Yes.
And Tyler and I, we've always thought about this idea of, like, rather than just sharing the wiring instructions, which is important, how do we, if someone's ready, how do we create the movement of that money in the same session, still providing all the security and all the insights that we need to make sure that we're not communicating with a bad actor that somehow infiltrated the communication string. So there's not a if, it's not a this and not that, it's a both. And it took us a proper amount of time to get this right, and I'm just very excited for what this will mean for certified customers and the overall community, and having kind of an end-to-end, fully transparent, fully communicated EMD process. We've so desperately needed it. I can't say it clear enough. So with that, if you want to engage and speak to one of our certified team members and a specialist that's working with Jason and his team, here's a QR code to kind of directly engage with us on this new offering. Again, from a title agent perspective, I just believe that this provides an edge in market, not only to bolster the security around the transaction, but again, I like how you said it, Jason, what a great introduction to some of the value the title company is providing to the transaction uniquely from the mortgage lender or the real estate agent, and we all make them look good in the process, right?
Yeah,
That's the goal. So
I mentioned it earlier, but I would encourage everyone to be curious. Reach out to us, ask the questions, let us show you how this can help you gain security and efficiency with the earnest money collection process, but also marrying it with the additional tools within Certified. So we're super excited about it, and excited to see where this goes the rest of the year for sure.
Jason, thank you so much for taking a minute, joining this To Catch a Fraudster series. And we look forward to our next episode, but also just the rollout of the EMD platform. So with that, guys, we'll sign off, and we'll see you next month. Thanks for tuning in.